Welcome to today's webinar, AGMs in Times of Disruption, Why They Matter and How Should Investors Prepare, hosted by CFA Institute and CFA Society India. I would like to take a moment to welcome our audience from around the world joining us remotely. My name is Sivanand Ramachandran, CFA. I'm a Director of Capital Markets Policy India at the CFA Institute. I am responsible for advocating policy positions on issues that impact capital markets, including corporate governance, ESG, and pensions. I am also one of the authors of this guide. Before I start with the webinar and introduce our speakers, I have a couple of housekeeping notes. Today's webinar is scheduled for 60 minutes, including presentation, panel discussion, and Q&A. We'll be leaving time for Q&A after the presentation. Please feel free to submit your questions throughout the presentation and panel discussion. You can do so by clicking on the Q&A icon at the bottom of your viewer and typing your questions in the box. We value your feedback, so please complete the evaluation survey before you sign off today. In terms of the flow of the discussion, we will have opening remarks by Shri Navneet Munot, CFA, followed by keynote remarks from our esteemed guest, Shri Amarjeet Singh from SEBI. After that, I'll make a brief presentation on the guide, followed by a panel discussion. Now, it's my pleasure to introduce Mr. Navneet Munot, CFA, for giving opening remarks. Navneet is the chairman of CFA Society India. He has 25 years of rich experience in financial markets. Presently, he is the managing director and CEO of HDFC Asset Management Company. Prior to this, he served as the Chief Investment Officer at SBI Funds Management, where he spearheaded investment worth over $42 billion across various asset classes. His articles on matters related to financial markets have been widely published. Over to you, Navneet.
Thanks, Sivanand. Good evening. The country has been going through a tough time with the second wave of COVID-19. I hope you and your loved ones are keeping safe. Please take good care of yourself. In the year 2014, we released the first investor's guide. The background was shareholders' meetings provide a platform for direct participation by shareholders in the affairs of the company through voting, through Q&A, through active dialogue with the board and the management. And we felt the need to come out with a publication that guides minority shareholders on the rules governing these meetings and what their rights and responsibilities are. This was a time when various reforms were underway aimed at empowering the minority shareholders. This was also a time, if you remember, when market regulator SEBI was nudging asset managers to actively participate in voting and make their voting decisions public. There was a discussion around moving towards e-voting to make it relatively easier for the larger participation of shareholders in these meetings. Our AGM guide, published in collaboration with IiAS, a proxy advisory firm, was widely appreciated. I'm so pleased to welcome you all at the launch event of second edition of that publication. This publication is a part of our mission. The mission of our community is to enhance member value by providing professional and career development opportunities, promoting the highest standards of ethics and professional conduct, and be a thought leader for the ultimate benefit of investment profession and society at large. For us, it's just not about advocating for the profession, but to raise standards across the board. We strongly believe finance must be for the ultimate benefit of society. And therefore, beyond monitoring and updating a standard of conduct and behavior for investment professionals, the CFA societies and the CFA Institute also work to shape and influence public policy and industry practice to put investors' interests first. Over the years, CFA Society India has always emphasized putting end investors first. In fact, around 2 years back, we embarked on an extremely ambitious program on financial literacy, Several of our members participated in a cyclothon titled the CFA Society Jan Nivesh Abhiyan, cycling over 1,300 kilometers across the country and conducted many programs of financial literacy among masses on the way. Our financial literacy campaigns include conducting clinics across vulnerable segments by tying up with institutions, corporates, self-help group, and foundations. I was fortunate to be a part of a group that conceived the Statement of Investors' Rights released worldwide by the CFA Institute, and India CFA Society again took the leadership and translated the Statement of Investors' Rights into Indian languages. On corporate governance, we have taken many thought leadership projects and have conducted roundtables or workshops on subjects including insider information, related party transactions, role of independent directors, and board diversity, so on and so forth. So this initiative of publication of the Shareholders Guide follows that tradition, the tradition of putting investors first. Our publication of Shareholders Guide is at the intersection of two things we care deeply. One, investor education, and the other is corporate governance. At a macro level, corporate governance in India has improved very significantly. There have been several reforms, including the ones brought in by the New Companies Act, Kota Committee recommendations, and many revisions in the LODR over the years. But for corporate governance, participation of minority shareholders remain important, because if investors are well informed and participate actively, then it can improve corporate governance materially more than what regulations could achieve. While policymakers and regulators continue to do their bit, and today we are fortunate to have Mr. Amarjeet Singh, ED SEBI, who will give his perspective on that, we at CFA Society strongly believe that reforms is actually a responsibility of everyone. Active engagement of each and every stakeholder is critical. Investor engagement, along with improvement in corporate governance, can enhance trust, which in turn can bring down the cost of capital, which in turn can lead to higher growth and prosperity for all. COVID has changed many things, and one of the noteworthy development world over and equally powerful in India has been much higher participation of individual investors in the equity market over the last year. Last year, over 1 crore new Demat accounts have got opened. Data shows 45% of exchange volumes is by individual investors. In fact, today, India's market cap crossed a $3 trillion mark, and individual investors have played an important role in this journey, particularly in the last 1.5 years. While India has a very low penetration of capital markets products, and it's a healthy trend to see higher interest, it's good to keep getting reminded a stock is an ownership in the underlying business and just not a ticker on the tape. As they say, those who don't learn from the history are condemned to repeat it, and we must keep in mind similar episodes in history. It is in that context, I would say, the release of second edition of Shareholders Guide is even more timely. It is a responsibility on the shoulders of all stakeholders to ensure investors are well educated, investors are well empowered, and investors are well engaged, educated, empowered, and engaged. A lot has changed. I was talking about the times during the last 1 year post-COVID, including the conduct of shareholder meetings. Last year, we moved to virtual AGMs across the country. Our panel of experts today will discuss how shareholder meetings are evolving, why they matter, how investors can play a role as responsible owners. I hope you have interesting takeaways from today's deliberations. The second edition of Shareholders Guide released today has come out extremely well. My sincere compliments to colleagues from CFA Institute and CFA Society and Amit and team at IiAS for all their contribution. We look forward to your critical feedback as well as constructive engagement. I'm sure everyone will agree to what Adam Smith said. Trust is the oxygen of capitalism. At CFA Society, we remain committed to build more trust, not only in our profession, but society at large. Thank you so much.
Thanks, Navneet. for providing that background for the guide and how it fits with our mission and investor initiatives. Stock is about ownership and not a ticker is my takeaway from your speech. Now, it is my pleasure to introduce Shri Amarjeet Singh for providing a short keynote. Mr. Amarjeet Singh, working with SEBI for the last 25 years, has extensive experience in regulation and supervision of securities market. He is presently the Executive Director in charge of Corporate Finance Department, dealing with primary market reforms, issuance and listing of securities, corporate governance and restructuring. He also heads the Department of Economic Policy and Analysis at SEBI. He represents SEBI as a part-time member on the board of NAFRA, the National Financial Reporting Authority, on the board of governors of Indian Institute of Corporate Affairs, and he was also on the board of NISM, the institute founded by SEBI. Over to you, Mr. Amarjeet Singh.
Yeah, thank you, Shiva, and good evening, everybody. It is indeed a pleasure to be a part of this webinar. I would like to thank CFA Institute and CFA Society for inviting me to this event. Let me also compliment the CFA Institute and their leadership for this initiative to develop an investor's guide for shareholders meetings. I think it's a very timely and a very relevant initiative. Turning to my brief remarks. These are very interesting, or if I can say rather intriguing times, while we have a pandemic-driven, full-blown public health crisis. The financial markets have relentlessly marched on. Many data points today are northward bound. So as a part of my remarks, what I would like to do is, just pick up some important recent trends. In fact, Navneet in his remarks already picked up some interesting ones, which I'm also going to talk about. These relate to increasing individual investors' participation in the Indian securities market. First, I'll talk a little bit about that. Then I would like to pick up some important reforms which SEBI has undertaken and which relate to empowerment of investors. So let me begin, straight away with the important trends relating to increasing retail investors, or rather individual investors' participation in our market. The first most significant trend is the exponential growth in the number of new Demat accounts opened in the COVID times. During financial year 2021, a total of 1.42 crore Demat accounts were opened at an average of more than 10 lakh accounts per month, as against 50 lakh Demat accounts opened during the previous financial year 2019-20. This obviously is a very impressive increase of 184%. And let me also add that this trend seems to continue. Just to give you a little long-term perspective on the Demat account numbers, the total number of Demat accounts as on March 31, 2021 stand at 5.51 crores, out of which 35% was contributed by the Demat accounts opened in the last 2 financial years. So you can, very well get a sense of how in the last 2 years there has been a massive growth in the number of Demat accounts. Now, talking about the share of trading by individual investors in total market turnover, there again, we are witnessing a steady increase over the last few years. Again, to give you a little medium-term or long-term perspective, the share of individual investors in the market turnover has risen from 33% in financial year 2015-16 to a commanding 45% in financial year 2021. Similar trend is also seen in the equity derivatives segments, where the share of individual investors in indexed derivatives has grown from 32% in financial year 2015-16 to 39% in 2021. So these trends have got particularly accentuated since financial year 2019-20. So one part is this impressive data. Obviously, it is good for the market. It will add more depth to our markets, both the number of individual demat accounts and also their increasing participation in the market. But I think what is important for us to be mindful is that, as an important stakeholder in the market, we have to make sure that the new investors stay invested in the market and their confidence in the integrity and efficiency of the market is maintained. I mean, that is what has brought them to the market, and that should not get disturbed. So while most of the reforms which SEBI undertakes, they are geared towards this objective of maintaining integrity and efficiency of markets. Empowerment of investors, of shareholders, to my mind, can particularly go a long way in improving the standards of corporate governance in our markets. So let me now pick up some of the recent steps which SEBI has taken for strengthening the role of shareholders. Not all of these are recent, but we've been making further tweakings in several areas. So I'd like to pick up some of these important areas which are drawing our attention. So one is e-voting, second is majority of minority, thirdly stewardship code, and then investor education. So let me pick up one by one each of these four different strands. So first, relates to facilitating shareholders' participation in general meetings. Since 2014, all listed companies, as most of you would know, are required to provide the facility of e-voting on shareholder resolutions, following the principle of one share, one vote. So 7 years have passed since then, but the voting statistics seem to be far from encouraging. So as per the NSE data, I was just trying to pull out some relevant data in this context. So data that I got relates to period January 1, 2020 to May 19, 2021. So almost a year and a half. So this data suggests that the public non-institutional category, on an average, investors representing only 18% shareholding exercise their votes. So only 18% voting happening. So while a substantial chunk of voting by this category which I mentioned is the public non-institutional category, it happens through e-voting, but the fact remains that the investors representing more than 80% of shareholding are keeping away from the voting table. So thus, to my mind, the full potential of this powerful reform of e-voting for facilitating shareholder participation is yet to be realized. The current pandemic times have further accentuated the need for popularizing, making this popular, the e-voting instrument that we have. So I feel that all the stakeholders need to collaborate and work towards this direction. Let me now mention a small but an important change that we brought about in December last year in the space of e-voting. So in December last year, SEBI has taken steps to enable e-voting by way of a single login credential, thereby allowing shareholders to cast their vote without having to register with multiple e-voting service providers. So the objective is to further increase the ease and convenience of the voting process. We have a circular in public domain. Those who are interested, can look up the details. The process improvements which we prescribed are to be implemented in 2 phases. The first phase is becoming effective in June this year, and the second phase is expected to be implemented later in December this year. So the circular gives this timeline. Let me move to the second strand. So Secondly, I want to talk a little bit about empowering investors through majority of minority. So as you all know, companies in India have traditionally been promoter dominated. To give you some perspective, around 60% of total listed companies have promoter group shareholding of more than 50%. And such companies contribute to around 67% of the total market capitalization. So it is in such companies that we feel in certain resolutions where there is a potential for conflict of interest of promoters and other non-promoter shareholders. There is a need to give greater say and more voting power to the minority and institutional investors. So RPTs, related party transactions in particular, is one such area, and accordingly, as per LODR, material RPTs require approval of the majority of minority shareholders. Let me add that despite this strict requirement, this is not there in many jurisdictions. Fraudulent, and I'm underlining, fraudulent RPTs used as a vehicle for diversion of funds continue to be a cause for regulatory concern. Another area, which we are currently considering for increasing the voting power of minority and institutional investors is the appointment and removal of independent directors. We had come out with a consultation paper on this recently. We are also looking at reducing the time period within which shareholder approval must be sought after an independent director is appointed on the board. So let me now move to the next area. I want to talk a little bit about stewardship code. Again, that's nothing new. It's been there for a long time in our markets, but some changes that we brought about recently. So our experience with stewardship began in 2010 when mutual funds were encouraged to vote in their investee companies and disclose the exercise of their voting rights. Subsequently, in 2019, SEBI, along with the other regulators, that is PFRDA and IRDA, introduced the stewardship code for their respective sectors. So the stewardship code, effective from July 1, 2020, requires mutual funds and AIFs to go beyond voting disclosures and actively monitor and engage with their investee companies. It's not just the voting, so expectation is to go beyond that. It also requires these institutional investors to periodically report on their stewardship code. Recently, SEBI has further enhanced the responsibility of mutual funds by making voting compulsory in respect of certain corporate governance matters, including RPTs. This has become effective from April 1, 2021. So this will be an interesting area to watch for some concrete outcomes of this initiative. Lastly, let me add a quick word on investor education. So besides focusing on our mandate of investor protection, SEBI also runs a comprehensive investor education program, which plays a key role in strengthening the individual's participation in securities market. So our recent initiatives in this space include launching of a SMARTS program, which is called Securities Market Trainers Program. This we launched in November 2020. Again, the details are available on our website. We are currently working on developing an investor charter, and we've been engaging with various stakeholders in the securities market for the preparation of this investor charter. To sum up, various regulatory reforms have enabled greater participation of shareholders in corporate decision-making. Moreover, the rising influence of proxy advisory firms and institutional investors has had the effect of bringing greater attention to corporate proposals. I think it's all good for corporate governance, This sets the stage for better corporate governance of companies in the country. I expect that as I said, this investor guide which is being released today is very timely and very relevant, and I hope it will be a very useful reference for shareholders. Thank you.
Thank you, sir. So I hope I'm audible now. I know I saw some comments from the chat box. Thank you, Mr. Amarjeet Singh. So I thought several of the points were interesting, right? So I think you mentioned new investors are coming in, and it's important that stay in the market and the confidence is maintained and so on. I see also it's an opportunity, right, for new investors to come in and participate in some of these shareholder meetings, right? So I think so hopefully better habits are formed, right? So if you're joining us new, right? So that is, I thought that was interesting. I also thought the e-voting effort to reduce frictions in the meeting process, all the the logins, this thing, I think the logistics to just make it easier for investors to vote. I thought that was an interesting effort. And I also thought the investor charter is a good effort. So thank you so much for your comments. So as next part of the webinar, I would present a short highlights from the report, right? Just a minute, let me share my screen. I hope you can see my screen. So in this section, I would present some highlights from the guide. The purpose is to not present everything from the guide, right? So there are a lot of sections, but to just give you a sense of what is there and how you could effectively use the guide. In terms of the objectives of the guide, so there are essentially three I can think of. The first is it serves as a reference for shareholders to understand the nature of shareholder meetings, including the procedures and rules of etiquette, right? So the nitty-gritties of shareholder meetings. So we cover a lot of basics there. The second part is to provide an overview of resolutions put to vote at shareholder meetings, and importantly, how shareholders can research important issues before the meetings. So how can you prepare for the shareholder meetings? So that's the second part. The main objective of the guide is to, of course, encourage shareholders to participate actively and ensure that their interests are not diluted, and also encourage companies to become more responsible and responsive towards minority shareholders. So those are the objectives of the guide. If I can briefly talk about how the guide is organized, we cover a lot of basics, right? So I think the important thing to notice, this is a reference, right? Now, like a lot of shareholders might be, say, first-time shareholders, and others might be experienced. So it's just important, you don't have to read up the whole thing, right? So you can tap into what is interesting, what is important, what is relevant to you. But we have covered the basics of shareholder meetings, including the types of meetings, the rights of shareholders, and the types of resolutions. So I think when I went through this process, I also learned some interesting things, right? So for example, you can access the shareholder register when you attend an AGM, in a virtual format, right? So you can actually see during the AGM the shareholder register of the company, which I didn't know. So we covered the basics, but the meat and the most important part of the guide is how to research shareholder resolutions, which is the bottom left, you can see. What we have done is we have picked up 13 typical shareholder resolutions and how investors can analyze it and potentially exercise their vote in an informed manner. I will take an example in the subsequent slide, but to me, that's one of the most consequential and perhaps the most interesting section of the guide. We also have a section on virtual AGMs. We have collected some member experiences, and I can briefly talk about it in the subsequent slides. And lastly, we have covered some international trends in AGMs. I know Mr. Amarjeet talked about the stewardship codes, and the other trend which we are seeing is ESG related resolutions. Now, it is not, so these trends are something interesting to keep in mind as we see how AGMs are evolving in India in the future. With that background, I will probably delve a little into some of the sections. The first thing I want to talk about is how to research resolutions. For example, how do you research a director remuneration resolution, right? So I think the issue is coming up frequently. And if you are interested to vote or assess the important elements of a director remuneration resolutions, what do you need to know? So you need to know three things. The first is regulations concerning director remuneration, right? So for example, the total board remuneration exceeding 11% of net profits require shareholder approval by special resolution. So this is a fact that and there are other regulations concerning director remuneration which investors need to know when they assess a resolution. The second part is company disclosures and best practices. That is, what is the company required as well as potentially expected to disclose in a typical director remuneration resolution. For example, some of the things the companies are expected to disclose are a breakup of remuneration, the ratio of managerial to median employee pay, as well as any performance benchmarks they might have to assess remuneration. The last part is how do you analyze or what kind of things do you need to examine or even potentially ask in the AGM if you have to get more information. Some of the things that you may want to look at is how is the increase in remuneration compare with increase in company's profitability, the remuneration of directors with respect to industry peers, or potentially what is the proportion of variable pay in the remuneration breakup. So what we have provided, right, for 13 types, including director remuneration, is like a checklist, right? So it will, you obviously need to assess the facts of the case, but if you have a checklist, at least know what are the questions to ask, and potentially that can help you not only in making informed decisions, but potentially ask good questions in the AGM. So that's the section on how to research. Next, I would like to talk a little bit about virtual AGMs. So it is a phenomenon which came into being last year. So we have provided some global perspective. So India is not unique in popularizing or making virtual AGMs a default way of engaging. So we have provided some global perspective. We have also kind of talked about the regulations concerning virtual AGMs. But I think the part which I think is most interesting is we asked our members their experiences attending virtual AGMs and potentially what are the do's and don'ts and what are the issues that they think of concern. And I've just listed a few, so you can find the remaining things in the guide, which is shared in the document section, and you would have received a copy. So, for example, our members said that you need to remember to register yourself as speaker. One of the things is in a physical AGM, you just need to show up, right? And you can ask questions, but that's not possible. Sometimes you have to register yourself, otherwise you can't ask questions, right? Some companies ask their questions be submitted beforehand, and there is potentially a timeline by which you need to do that. So they don't, like some companies do not take questions during the meeting, right? So those are the things to note. And I think one thing which like our members experienced is in the virtual AGM, there is no way to collaborate with other shareholders, right? So in a physical AGM, some of our members have talked about banding together to make sure that the management listens to their concerns, right? So I thought the member experience part of virtual AGM was interesting, and I thought you can look at some of the other takeaways on virtual AGMs in that section. And to conclude, I will just talk about the rules of etiquette. So there are 3 parts to an effective AGM, right? You need to know the regulations and the procedures and so on. That's the basics, right? The second part is, how to research resolutions, how to analyze issues, how to prepare for meetings. The last but and also important thing is the ground rules on, how the AGMs are themselves conducted. And those rules of etiquette applies to both investors and companies, right? So we don't want to only say that this is how you should act or behave, but some things are applicable for both. For example, if we say avoid obstructive behavior, for investors it might mean don't interrupt other shareholders or avoid personal comments and so on. But from a company's perspective, it's important that they disclose the manner in which questions are addressed by the board, or potentially refrain from using technologies to avoid uncomfortable questions, right? So I think like the same ground rule could mean different things for investors and companies. I mean, it's one thing to say that shareholders should exercise voting rights, but from a company's perspective, they can do some, they can do more. The best companies provide detailed instructions on voting process. The best companies provide dedicated helpline for addressing voting related queries and issues and so on. So I think an effective participation, which is our goal, consists of 3 parts, right? Knowledge of regulations and procedures, preparation prior to the meeting, and good rules of etiquette during the meeting. A lot of other things are covered in our report, and I hope that you're able to go through it and also more importantly attend the AGMs and ask good questions. With that, we will proceed to our panel discussion. Let me first stop share. Sorry. It's my pleasure to introduce our panelists and moderator for the panel discussion on AGMs. First, let me welcome Mr. Amit Tandon, the founder and managing director of Institutional Investor Advisory Services, IiAS. Before IiAS, Amit was a managing director and CEO of Fitch Ratings between 2001 and 2011, and he was with the ICICI Group for 17 years. Amit is a corporate governance expert. He's a member of Kotak Committee on Corporate Governance, has been a member of RBI's Technical Advisory Committee on Money, Foreign Exchange and Government Securities Markets. Welcome, Amit. Next, I would like to welcome Ashwini Damani, CFA, a finance professional with 12 years of experience in a wide variety of roles such as IFRS implementation, due diligence and corporate law. He has worked with Big Four audit firms and MNCs such as Lafarge. He has been investing in equity markets since 2007 and an independent analyst primarily managing personal and family investments. He is a CFA charter holder and our chair of advocacy at the CFA Society India. Welcome, Ashwini. Ashwini is also contributed a lot, especially in the the member experiences attending AGMs and such. The panel will be moderated by 𝗵𝗃𝗀𝗃𝗃, CFA CAPM, our country head at the CFA Institute. Over to you, Vidhu, for taking over.
Thank you, Shiva, and welcome once again to all of you. And we've heard from Navneet and from Mr. Singh, and you know a little bit about what's there in the AGM guide. And I hope you will go in and read it. And I'm sure that most of you, if not all, are shareholders, and I also know that majority of you don't really participate in AGMs, perhaps. So maybe this will persuade you to go and pay more attention and start voting. So before we start, I just want to take a minute to to congratulate everybody who has been involved in this process. This second edition of the AGM guide has been a labor of love. So many people have contributed to it that we can't name all of them. Primarily, we have the three parties: the CFA Institute staff, CFA Society volunteers, and Mr. Amit Tandon's team at IiAS. So I would like to call out Amit and his colleague 𝗕𝗫𝗄𝗃𝗀, who worked very hard on this. 𝗕𝗫𝗃𝗀𝗃, of course, has been leading this effort as the Capital Markets Policy Director since he joined CFA Institute in 2019. And the whole research and advocacy team, Ashwini is represented here, but there are so many others, including 𝗓𝗏𝗃𝗀𝗃, who is the director in charge of research and advocacy. Now, the Institute, as I'm preaching to the converted here, but most of you know and are aware that we, apart from the exams, we do a lot of work in research, advocacy, capital markets policy, standards, and outreach. And this is an outreach piece. Navneet talked about the big outreach piece that we did in before the COVID in 2019, late 2019, the 𝗓𝗵𝗿𝗀𝗵𝗿. And this, in many ways, is different, but also equally important, as Mr. Amarjeet Singh said. Unless minority shareholders start voting and engaging with companies and influencing company decision making, we will not see improvements in corporate governance from companies. So without further ado, let me get started. We don't have too much time. We have only about another 20 minutes or so left, and we'll do a quick rapid fire round of questions. You already heard a lot of these issues, and I'll first start as with the continuing relevance or irrelevance of AGM. Let's start with the null hypothesis. Okay, are AGMs relevant at all today, or are they relics of the past? You'll find it very funny that I'm asking this question at the release of an AGM guide, because had we thought that AGMs are not relevant, we'd probably not have gone to the trouble of creating this guide. So this question is directed to Amit. You think that AGMs are still relevant? What really happens at the AGMs?
Thanks a lot, Vidhu. But before I kind of jump into the deep end with the question you asked, let me kind of add my few bits. First, I'd like to thank you and the team at the CFA Institute for inviting me, but equally important, giving us this opportunity to work with all of you on the guide once more. I remember we first worked on it in 2014-15, and that's around the time you joined. So we were kind of stuck midway till you joined, and you kind of helped us see the end of the day on that one. So that was it. The second, because the subject is very close to our heart, during the last 1 year, other than the guide itself, we've published about 5 blogs on AGM. So it's, in a sense, while that's not a direct answer to your question, it is something which keeps us engaged a lot. And the third, of course, is, the occasion to dress up is few and far in between. So this gave me an opportunity to kind of dress up. So thanks for that. And that's also a chance to ask. I hope all of you are staying safe. But let me kind of stop short here and jump into the question you asked. Look, I think AGM, as you'd see from the guide, actually serve 3 purposes, and that will give us the answer in terms of how relevant they are or not. The first is the fact that, it's an occasion for everyone to review the performance of shareholders, to review the performance of the company, and to ask management some questions about what is happening, what is the performance, and what can they expect going ahead. The second is, if you look at it, the number of decisions which have been delegated to the board are few and far in between in India. I can count at about 27, 28, 29 items on which companies invariably need the shareholder approval, and the shareholder directs the company or its management to do certain deeds and act. And therefore, you need their approval for these. And the third, of course, is it's an opportunity to interact with the management. Now, if you kind of look at the first thing, from the time when we first imagined AGMs about 20, 25, 30, maybe 50 years or maybe longer, we've now moved to an era where there are quarterly results, quarterly updates. You meet investors in sales-side meetings, etc., etc. So that purpose is still there, but it's kind of significantly diminished, at least for the institutional investors. The second part, of course, is that delegation. Now with e-voting, while one of the advantages is that people from the remotest corner don't have to travel to attend and vote on the meetings, but just by virtue of what is happening, you are able to vote on a resolution without a discussion taking place and get it out of the way for the meeting itself. Which brings us to the third factor, which is interaction with the management. Now, this is something which we find even now shareholders value deeply. And it's not just the retail investors, but also the institutional investors for a couple of reasons. If you look at, if they try and meet the management, they tell us that they get fobbed off by speaking to either the people in the investor relations team, or they might interact not necessarily, but with the CEO, or they may not get to interact with the full board. So that gives them an opportunity to interact with the full board. And this is true as much during the virtual AGMs as it was 2 years ago. And of course, the related aspect of that is that then they get to kind of ask questions, meet up with others. So that, to my mind, remains at the heart of why do AGMs remain relevant today. The interaction which takes place between investors and management is very critical.
Thanks, Amit. So let me go to Ashwini now. So, you mentioned that institutional investors at least have a lot of opportunity to interact with management, even though still, here AGM provides them a platform for interacting with the full board and so on. But individual investors don't have that opportunity. So I just want to, switch tracks from a user point of view, Ashwini. You attend AGMs, right? So what
Yes.
is your main motivation for attending AGMs? Why do you bother?
So thanks, Vidhu. I broadly tend to agree with what Amit said, that today a lot of con calls happen and there are quarterly presentations, etc. that are uploaded. But not all companies do that. Even there are companies in the Nifty 50 who still do not hold con calls or give presentations. So an AGM is pretty much the only place where you can meet some management, especially the mid-cap and small-cap ones, the hidden gems one. In India, we don't have the concept of investor day. So how do you judge managements in those cases? How do you ask questions? This is by visiting AGMs of such companies, asking them questions on their strategy, plans, etc. And in an AGMs, managements are also often more open and forthcoming. They don't have to worry about breaching any law, because by law in an AGM, you can speak anything. It is not, in a con call also, they are very guarded because a lot of times they don't know if they will breach any line. But in an AGM, law allows you to be more open when you're dealing with shareholders at large. Secondly, so I have got a lot of wonderful insights by attending AGMs. As a smaller shareholder, even when I'm now working with a family office, a lot of times I have got access only at an AGM and not directly. Secondly is the body language part. In an even in an online AGM, it is not easy to judge a body language. Oftentimes you need to be around the management to judge their body language, their optimism, and whether they will be able to pull it off. Remember, business is about betting on a person. So that body language becomes more important, especially if I have to judge the body language of the second and third line of management, maybe the promoter's son or his daughter or whatever. Thirdly is fellow shareholders. I have been blessed with the opportunity to attend various AGMs where I've met fellow shareholders, very good, who have become very good friends. whom I've learned a lot by looking at how they question things, how they approach things. And in time, you make a network of people with whom you can bounce off your ideas, even about that company as well as some other companies. Also, when you approach the management along with a group of people, they are more amenable to answering your questions. So that is also where an AGM becomes important.
Okay. Thanks. All very powerful reasons. But you still remain in a minority, right? So I think Mr. Singh said that individual shareholders constitute 18%.
Yes.
So do you think that it will make a difference if more people think the way you think and start, taking AGMs more seriously?
Yes, definitely. I can share with my experience of being even an auditor. Managements are really worried about what happens in an AGM. It's a lot at stake. They are meeting people direct face to face, whether it's an online AGM or a physical AGM. I have always seen managements, even in my earlier organizations, that they take AGM seriously. So it is important for the shareholders to also take it seriously. You can ask questions to the management, you can judge them. And finally, what is investment about? It's about promises and whether you believe in those promises. So in an AGM, you ask management questions about their old promises and the new promises that they are going to make.
Great, wonderful. So Amit, coming back to this whole discussion on virtual AGMs. So last year was the first year when we had all these virtual AGMs, and clearly the experience was very different. What is your observation? What are your observations about what really happens in virtual AGMs, and how are they better? What are their limitations? And what do you think is going to happen post COVID in the way AGMs are conducted?
First is, we need to recognize that the speed with which we kind of shifted to virtual AGMs has been remarkable, and for that you need to compliment the regulations, which if you kind of look at Indian regulations, they've kind of said that virtual AGMs in itself would be complete, as against if you look across Asia, most other geographies wanted to have a hybrid approach, and they were kind of making it a little bit difficult for companies, but India kind of made it very smooth for companies to transition. So the regulators, plus the speed with which the technology, the technological backbone was made available, the speed at which all the company secretaries, etc., worked towards it was remarkable. Now, there are a couple of things, as you would expect in all these cases. There's some good parts of it. There are some parts which haven't worked so well. So one of the good things is that, people don't have to necessarily commute. So I own shares. And I'm talking not just from an institutional investor perspective, but also from a retail shareholder perspective. I'm sitting in Mumbai. I own shares in a company in Chennai. I may not, in the normal course, have been able to go and attend the AGM, but now with the virtual AGM, sitting at my desk, sitting at home, I'm able to attend and figure out what is going on and be able to dial in and see what is happening. So that's a big positive. Having said so, when we look at the data for the top 100 companies, how many people attended AGMs, etc., there was a big drop. And if you were to kind of exclude Reliance Industries, there's a very significant drop in the number of people who've attended AGMs. So maybe they need some amount of education, or maybe there was some reluctance, or they weren't sure what the experience would be, but that we'll have to see. The second is on the questions. Now, there I'd say that it's a function on how seriously companies want to take questions. And it kind of cuts both ways. So in the case of TCS, one of the shareholders got up and spoke about, the pagination which was taking place in the annual report, which was a waste of everyone's time. But at the same time, you had people asking some very relevant questions. And TCS as a company actually took time to address each of these questions very seriously. The flip side was another company where one of the shareholders kind of said that, look, your board composition is not in line with what the regulations are asking. What do you have to say to it? And they kind of fought them off, saying that, look, it's the quality which matters. All this is not relevant, etc. And therefore, if you kind of give a serious answer to a question, you'll find more investors engaged, more investors willing to ask you. But if you kind of fob it off and say that, look, it's not relevant, don't ask these questions, you'll find that, shareholders will also quickly lose interest. Finally, we did see some instances where the difficult questions were not answered by either saying, let's move on, giving an answer which didn't actually quite address the question and saying, let's move on to the next. If you had a physical AGM, people would have been able to ask you that. But the converse is, you could also say, technology, I can't hear what you're saying, I can't hear what you're saying. But on the whole, I think, as one says, what you lose on the roundabouts, you gain on the swing. So there are some pluses and some minuses, but I'd like to believe that virtual AGMs are here to stay. I'd like to think what will happen once the pandemic is behind us. We'll move to a hybrid model where those who want to attend AGMs will physically attend, while those who are wanting to do so remotely will have the opportunity to do so remotely, and that will give us the best of both worlds, so to speak.
Thanks, Amit. So Ashwini, if the physical AGMs are happening, you would definitely prefer to go and attend those, right? Are you attending more AGMs now that if you don't have to travel, how does your behavior change as an investor?
I couldn't agree more with Amit. I would personally love to have the hybrid AGM model in place. Yes, with the virtual AGM, it solves one big problem, that of traveling. I am able to attend a lot of AGMs, especially if they are happening on the same day, one in say Chennai and another in say Delhi. So I'm able to attend both of them in the morning and in the evening, or even with a gap of few hours. But it just solves one problem and has created many more problems, in my view. I have already mentioned that I'd love to judge body language, etc., meet fellow shareholders. But the biggest and literally the biggest problem for me personally and for some shareholders that I know is that the scheduling and screening of questions. So virtual AGMs require you to submit your questions in advance. Now, this presents an opportunity where the management might skip your questions by saying there is paucity of time. Then there is
and you have observed that happening.
Yes. And another is the scheduling of questions. Whose questions will be put up first and whose questions will be put up later. You don't have an access to that. Let me share you an example. I was in the AGM of a large company, probably the largest, one of the largest in India among the top 30, 40 companies. And this company doesn't hold any con calls or gives presentations. So my only opportunity to ask questions in the past has been an AGM. Here I submitted my questions and I waited for 90 minutes while the AGM went on. I don't even know whether my question will be put up. So I have to wait patiently. Maybe it will come at the first minute or maybe at the 90th minute. And the entire AGM got finished. I didn't get my chance. And the scheduling was done maybe unintentionally in a way that people who wasted time by singing poetry or asking silly questions were given more priority, and the more serious questions were given less priority. I'm not saying this was intentional, but imagine what an unscrupulous management can do with such kind of liberty. So that is the problem I have with virtual AGMs.
Right, but that too is some sort of signaling, right? You talk of body language, but here a company that doesn't take up serious questions in a virtual AGM is saying something that we don't want to hear, right? Yeah.
And this is quite easy in a virtual AGM for the company to use. So that is my biggest problem with the virtual AGM. And so as soon as maybe the world stabilizes, I think the hybrid AGM should be the way to go. So that there are times when I would just attend one AGM physically and the other AGM virtually, depending on my priorities and my seriousness of the investment.
All right. So, we are practically out of time. So what I want to do is quickly talk about, specifics in terms of what kind of resolutions are the most important for you. What has been your experience of what people ask? I know you've done a lot of work on related party transactions. So what do you observe in general? I want to first ask you and then go back to Amit.
So in general, I think a lot of data is today available in the annual report as well as in media, and with the help of proxy advisory firms like IiAS, etc. there's a lot of information readily available for you to make a conscious decision on whether and how to vote. So one must exercise it and spend some time on finding what are those important votes which you need to cast. And the important ones are the related party transactions, the management remuneration, and the corporate actions. So those are the ones I watch very carefully. And you have enough and more data available today to do research on those.
Right, and maybe we'll come back and do a webinar specifically on how to research resolutions, because we have a whole chapter on that topic, and we could go by different resolution types and see some examples and so on. So last word to you, Amit. Just one thing I want to specifically ask you. We added this chapter on stewardship and on sustainability, right? So that is becoming important. Is this being covered in AGMs? Are you seeing investors, management paying more attention? We have given an example of JP Chase in the report, in the guide, about climate and stuff like that. What is your view on this?
Sure. I'll come to that, but I'd kind of say I agree with Ashwini when he kind of pointed out those three things. What we're going to expect to see is that ESG matters, and on that climate is specifically attached or got a great deal of coverage on attracted a lot of attention of investors globally. In India too, I expect we are going to go down the same path, because if we look at it, there about last year itself, there were 6 ESG funds which were launched, and now we've got a total of 9 or 10 ESG funds which are there in India, and that's clearly becoming something which is much more important. So while it's not happened yet, it's something which we expect we'll see. I'll just add one thing where I think, where I believe that AGMs can serve a purpose, and if we were to kind of break the mold in one aspect, which is the fact that, if you look at the auditors, increasingly, or they've always had a very important role, but they've always taken a back seat. And if you kind of talk to them, they turn around and say, look, we've been hired by the company and the management, and therefore we're going to be, while you've been hired by the shareholders, they kind of believe they're answerable to the management. If there was a window which is created at the AGMs where investors can ask the auditors questions directly without the intervention of the management, I think that is going to be a good first step in terms of changing the relationship between the three players, the companies, the auditors, and the shareholders. And that in itself will make, I would say, bring back a lot of, while some of the, will start to make AGMs far more relevant than they are today. So that's one of the big changes which I'd like to see in terms of the practices in the AGM.
On a lighter note, we are also just like the AGM companies, that we've run out of time with no time for Q&A, so which is not very good. So I guess we will have to have follow-up conversations, and this AGM guide is just the first step for the work that we are trying to do.
Let me say that, look, if you send the questions, we can take a shot at sending you the responses which you send to the various people who've asked the questions.
We will do that, yeah.
We have not been able to answer it here. At least we can do it subsequently.
Thank you so much. Thank you, Amit. Thank you, Ashwini. And back to you, Shiva.
Right. Thank you so much for sharing your insights with us. So a pop-up would have come for an evaluation survey. If you could do it, if you have done it, thank you so much. The CFA Institute and CFA Society India members can claim 1 professional credit by logging into their online professional learning tools. And we also have upcoming webinars, which we would encourage you to join. On 10th of June, we have the Career Insights from Amit Tandon, CFA. So that should be a good one. With that, thank you so much for participating in today's webinar, and we wish to see you soon.